Hello everybody, happy 2024. Can't believe we're already 1 month into 2024. Time seems to be flying. The days are long and the years get short. So I'm experiencing a little bit of that. Hey, in this week's or this month's market update, I wanted to talk about 4 different things. The rate environment, the purchase market environment, the new Fannie Mae announcements. They've made it a lot easier, especially on units. And then the new program for self-employed borrowers, new-ish program for self-employed borrowers to help them qualify without tax returns. So first, let's talk about the rate environment. Rates have dramatically dropped over the last 3 months from a high of about 7.5 to the high 5s. And that range obviously depends on the scenario you're dealing with in regards to your down payment, credit score, et cetera, et cetera. This is mainly due to the inflation fears starting to subside. And basically, it's expected to continue to slowly drop into the mid to low 5s over the next year to year and a half. So pro tip on this, look at the 10-year T-bill, and then specifically for short-term 2-year and 3-year T-bills to uninvert. Right now we're inverted, which means that the 10-year rate is lower than the short-term rate. Once that is uninverted, it means that the economy is starting to slow, which is usually good for interest rates. So that's the rate environment. Second, purchase market. Even with the historically high rates and it also being through the holiday season, market is super strong. Any listing that is priced even close to being reasonable is bid up through multiple offers, cash offers. So while it's not as crazy as it was in 2021 or 2022, it is still super competitive. So if you're waiting for prices to drop, I think you're going to be quite a surprise later in the year because of the aforementioned lower rates that are being anticipated, as well as the selling season, which usually starts around April. I think it's going to be a very, very competitive market for purchases, and we're going to have continued price appreciation. And the main reason for that is lack of inventory. Somewhere in this video below, I'm going to link a previous video that discusses that. If you're interested in watching that, just go ahead and click that link. New Fannie Mae announcements that is going to help first-time homebuyers. The first one that came through was new loan amounts. Fannie Mae single-family residents are now 1.149 plus some extra. And then for 2 to 4 units, you're capped out on 4 units all the way at $2.1 million, which now makes it a little bit easier to use a Fannie Mae loan, which typically has lower rates and is more aggressive. Here is the huge announcement for owner-occupied 2 to 4 units. You can now go with 5% down. So for anyone who is comfortable in being a landlord and is looking for a way to help offset their mortgage payment by having a renter pay it, and you're going to be an owner-occupied, you can get a 4 unit with 5% down. This is a huge opportunity, and it hasn't been that way. It's 20 years since Fannie Mae has allowed 4 units with 5% down. So if you're interested in that, give me a holler. We can run some numbers for you, right? Last thing I wanted to talk about is a program that is starting to gain some traction with self-employed borrowers. Let's be honest, if you are self-employed, you are paying your CPA really good money to legally deduct every single expense in order to reduce your taxable income. So the problem with that is that all lenders use taxable income as a method to determine whether you can pay them back. This newish type program, because they've been around for about a year now, is not available through your big box banks like credit unions, Wells Fargo, B of A, Chase. What the lenders are doing to determine if a self-employed borrower can qualify for the loan is basically they look at the last 12 months business or personal bank statements, and they look at your cash flow to determine what your income would be. I have personally closed 4 loans like that in the last 2 months for self-employed borrowers who would have never qualified. So if you have any questions, if you're self-employed or one of your spouse is self-employed and you've got good cash flow, we can probably help you out. So just give me a call. Last thing, there are a lot of lenders calling, advertising, email. As you can imagine, business is slow. So they're getting very, very aggressive, and they're calling homeowners to refinance their current mortgages to pay off high interest rate credit card debt, student loans, car loans, anything with a high interest rates. And they're using sales pitches like, hey, let's average out your interest rates and other gimmicks. Do not fall prey for this. Most borrowers have historically low rates, which will never ever be seen again. So if you change that in for a rate to save money and, because your payment's going down, call me to discuss a second trust deed. It's probably a much better way to go. We do seconds all the time. We'll run the numbers to see if it makes sense. Anyways, all of that being said, I hope you guys are having a great 2024, and we'll talk soon. Numbers down here somewhere. Give me a call if you have any questions. All right, guys, take care. Bye-bye.